And joining us now is Samantha LaDuc, founder and CEO of LaDuc Trading, which focuses on global stock market analysis. So, Samantha, you must get these questions all the time. Will there be a reversion to the mean? Is this time different?
Right now, we're having profit taking, and it is due. But I still think we have a bullish market backdrop. For the most part, options expiration, which ended last Friday, kind of suppresses volatility. And then we have the end of the quarter, or I should say we are into the end of the quarter this week. So it is very extended, this AI tech ecosystem of stocks. There's no question. So they are having some pullbacks, some I would call profit taking. You also noted in Bloomberg, the terminal, that you've got Dell doing some CEO doing some very large insider selling, with Avgo CEO also 25% position. Now, keep in mind, that's not necessarily a top call. They did the same back in 2019, and the market, the stocks continued to quadruple from there. But the point is, they're taking some chips off. And we're going into a blackout period for earnings coming up in a few weeks, where 80–90% of those buyers are going to be on hold. And then you kind of add the Treasury right now, TGA, which is the Treasury General Account, is kind of on its low for liquidity. Put lots of stuff together. You've got that end of month, end of quarter profit taking on very extended AI tech stocks that were due a little pause.
Yeah, and you mentioned Broadcom there. It's down about 0.6%. So how much of this move is related to yields, Samantha? Because we do see that quite frequently. We see, if yields are repricing because of some Fed comments, we do see a move in the market. Is any of that due to potentially, the idea that the Fed might be changing its mind on when it will move?
I definitely think there's an underpinning right now where the macro backdrop is getting a little concerned, not just with this euphoria in the AI tech space. Forward earnings have been very robust, and that's also feeding, on a baseline bet that the economy is growing, and therefore earnings will grow. Jobs have not percolated to a danger level of unemployment where the Fed would have to intervene, but we are absolutely basing and starting to head higher in unemployment claims. So basically, the Fed has really this pause mandate, and yet other central banks globally have started to cut. So this is the big question. Are they cutting just kind of political expediency, or are they sensing that there is a reduction in global demand of credit? And that's typically kind of a precursor to why a central bank will begin a Fed cutting regime, is if they start to see that global demand of credit roll over. So we're going to really need to watch banks this earnings season to see how they're performing on credit, on lending, on their net interest margin, to see if we do have some signs of more bearishness or concern to this market advance.
Really interesting points there on global credit and the possibility that the overall picture is tightening, given the fact that other central banks are cutting. So given that, when the Fed does cut next, knowing that we do need more color from some of the other banks, but if you were to guess right now, based on all of the different macro points and the cross-asset class studies that you do you think that the Fed will see the next cut or a couple of cuts, if they were to come, as true accommodation because they are needed to support a sagging economy?
So I think we will really get a tell if the yield, the 10-year yield drops below 4.2%, which is, by the way, short-term bullish for equities. It also kind of loosens up the frozen housing market, but it would also indicate that we have more global demand of credit falling, and that would, I think, spur at least accommodation talk at the next July meeting, and potentially a move sooner than what is priced in, which has been, by the Fed's own admission, Waller and Powell and others, end of this year, beginning of next year. So most are focused on that narrative of Fed rate cuts have been priced out in time. I think we're actually going to start to pull that forward after this summer, and we can go down and break that 4%, that 4.2% for the 10-year.
Yep.
as the unemployment is starting to percolate higher into 4.2% unemployment.
So that would be a real shift in narrative if all of a sudden the Fed is talking about accommodation as opposed to just these cuts that people are thinking about after inflation spiking. Hi, Samantha, that chart I was taking a look at, that is from you. Wonderful chart, really shows how overextended things are relative to some of these big tech names, the AI craze, the weighting to those names. And when I put that against the backdrop of the possibility of global credit tightening, but I know that you say topping is a process. You also watch margin. So talk to us about the other key tells in terms of whether or not that we're going to see a big rollover, as that chart suggests at some point is likely.
Well, right now, the bullish backdrop is that we're in an election year. So really, it's Fed and Treasury will help support this market. And this will be a lagging impact from the higher for longer. And typically, by the way, it starts to bite about 18 months later. So I think the margin debt as it relates to a tell is typically rolling over when we have real more confidence that the economy is decelerating. And right now, I mean, we're going to get GDP for Q1 on Thursday. Probably 1.3. So we have still slow growth backdrop. But when margin debt typically rolls over, it is a sign that folks are selling things. So the fundamentals start to matter a lot more. Right now, I think the concentration risk in AI tech has really helped disguise or camouflage the weakness in the market. I mean, small caps to SPY, relatively speaking, are below 2009 lows. Transports relative to SPY as a ratio are below 2004 lows. We still have that chart that you just mentioned, which is NASDAQ to NASDAQ equal weight, will have a reversion, and then we'll have to see how it does once it kind of stabilizes on this profit taking. It could pick up speed to the downside this summer. Volatility typically bottoms seasonally in July. So we do have some shake and bake to look forward to, I think, end of this summer.
Some shake and bake. Samantha, thank you so much. That is Samantha LaDuc, founder and CEO of LaDuc Trading. And of course, Bloomberg's Abigail Doolittle with us as well.